Welcome back to Bell Direct's series on small cap companies. I'm Kate Jordan, and today I'll be interviewing Jake Klein, Executive Chairman at Evolution Mining. Evolution Mining is a really interesting stock, with its share price up 100% in 2015, whilst the US gold dollar price was down by 3%. Not only has it seen strong capital growth, but it has also been a dividend payer as well. Evolution Mining also hedges some of its production at 1,600 Australian dollars per ounce. So today we'll be chatting with Jake to get his take on the gold price and where to next for Evolution Mining. Thanks, Jake, so much for joining us. I guess I just wanted to start by giving our clients a little bit of insight into you. You've had a really successful career, with Sino Gold, but you've also worked for Macquarie and PwC, so quite a varied career. So what was it that led you on the path to gold, and what interests you about gold?
Thanks, Kate. Thanks for having me on the program. I've always called myself the accidental miner because I'm an accountant. You can probably tell from my accent that I wasn't born here. I've spent almost half my life in Australia now, and I managed to get a job when I arrived here at Macquarie Bank. The most profitable division at that time was the bullion division, so I managed to get into that. In fact, I was first in internal audit, then I got into the commodities area. And then by chance, someone said to me, well, has anyone been to China? On the desk, they were looking for someone to go to China, and then the whole Sino Gold adventure started. So definitely the accidental miner.
And what is it about gold? What really attracts you to it?
Well, once I think it's in your blood, you're infected by it because it is such a fascinating business. I mean, I've had the opportunity to travel to remote places in China, meet remarkably interesting people. I've talked about the La Mancha deal where we did, which is the recent deal, an Egyptian billionaire who owns it. He's got a Paris-based management team, and we met in Rome for dinner. And that was just, to me, the remarkable piece of the mining industry.
Very impressive. Now, I guess you could say that you're the man with the mightiest touch, given where Evolution Mining share price has been over the past 10 years. But I guess today in this lower gold price environment, how does this fit in with your vision to be a growth-focused gold company?
Well, we took a strategic view. I exited from Sino Gold in late 2009. The US dollar gold price was still rising, but we took a view that Australia represents an opportunity. And so the journey for Evolution started 5 years ago. In fact, in a small company called Conquest, which had one undeveloped and in fact failed feasibility study on Mount Carlton. And nothing really else, a bit of money. And we set out to build what we thought was the opportunity, or take the opportunity, which was to build a globally relevant mid-tier gold producer in Australia. Remember that costs were very high and rising in Australia, largely because of the iron ore price going up and the coal price. So costs in Australia had become very high. The Australian dollar was very high, which meant that Australian gold producers were under real pressure. Of course, since a couple of years ago, that's really changed, and that was the opportunity we were waiting for. Costs are normalising and coming back down. The Australian dollar's falling. So in fact, from an Australian dollar gold producer's perspective, our profitability per ounce is rising.
Okay, so over the next 3 to 5 years, what kind of environment do you think that Evolution Mining will be operating in?
Yeah, so we've come from really that shoebox company. We've now got 7 wholly owned mines in Australia. We're going to produce about 800,000 ounces of gold on an annualized basis. Costs have come down, so we're a low-cost miner. Certainly in US dollar terms, we're back in that lowest cost quartile. Evolution's been able to acquire 2 very high-quality assets. The Cow mine in New South Wales, that's a fantastic mine. It was bought from Barrick. It produces about 250,000 ounces of gold a year, low cost, and is really going to be a cornerstone asset for us. It's permitted out to 2024, but we'd expect it to have a longer mine life than that. The Mungari mine in Kalgoorlie, near Kalgoorlie, 20 kilometres outside of there, is a high-grade mine. And then we've got our 5 existing assets. So we've really built ourselves a platform where today we find ourselves in the somewhat surprising position of being the second largest Australian listed gold producer.
Okay, so at the moment hedging policy is related to gearing levels. I guess I'm interested to hear more about your hedging policy into the future. Where to from here?
Yeah, we'll use hedging as a risk tool. That's what we see it as. Our job as the management team is to manage the balance sheet as best as we can, ensure that we don't always assume just that gold is going higher and higher, that's got a few gold companies in trouble. So to manage the balance sheet and have an appropriate risk perspective on it, and we think, whilst we're in this period of relatively high gearing, 28% gearing level at the moment, coming down, and we'd expect it to be below 20 by the end of this financial year, hedging seems to be an appropriate strategy.
I noticed the gold moves in these massive long cycles. For example, the gold price seems to be going up since 2001, almost concurrent with the China boom, and now we've seen this come off with China's slowdown. What kind of conditions would you expect for us to, see another boom like that?
Gold's been such an interesting commodity over the last decade. It is the ultimate store of value. I always tell the story of a suit, the price of a suit, in Shakespearean time. The price of a fine suit, gentleman's suit, used to cost 1 ounce of gold, and today if you went down the road and bought a fine suit, it would probably cost you 1 ounce of gold. But the reality is that since the fear of all this money printing has reduced, and there was a time in April 2013, before that, really people thought we were going to drown in all this money the US Federal Reserve was printing, all these QE programs, and the end of the fiat currencies was being called. And then after April 2013, the view was, well, actually not. The US economy is turning around. There's no sign of inflation, and there's no real reason to own gold. So gold in US dollar terms today is at 1,100 US dollars an ounce, which is low. Its peak was at 1,900 US dollars an ounce. So gold investors over the last couple of years, if you were exposed to US dollar denominated gold producers, you've lost a lot of money. It's the Australian sector which has differentiated itself because it's got a currency which is inversely related to the US dollar. And so whilst you've seen the gold price come down, you've seen the currency drop almost as much, giving Australian gold producers now a competitive advantage. That, coupled with the fact that costs have come down because costs are really unsustainably high in Australia during the commodities boom in the bulk commodities, you're seeing us become much more sought after by international gold investors.
Okay, fantastic. So any final words?
Well, we still see Australia as a fantastic opportunity, having mined in China and built gold mines there for about 15 years before coming in and starting this evolution in Australia. I can tell you that Australia is probably God's gift to miners. It's a vast, underpopulated country. It's very mineral prospective, and its people understand mining. So, Australia is a fantastic place to mine, and Evolution is building a great gold company in Australia.
Absolutely. Thank you so much, Jake. That was great.